Ladies and gentlemen, good day and welcome to the earnings conference call for the quarter and financial year ended FY23 for Hi-Tech Pipes Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anish Bansal, Whole-Time Director of the company. Thank you, and over to you, sir.
Good morning and welcome everyone in our quarter and financial year ended 31st March 2023 earnings conference call. I'm joined on the call by Mr. Santosh Rai, GM Finance, and Mr. Arun Sharma, Company Secretary of the company. I hope everyone has had a chance to go through our results and investor presentation uploaded on the exchange. Now let me take you through our financial highlights for FY23. In this quarter, we have witnessed highest ever sales volume of 107,000 tons, which entails to a growth of 26% year on year. A 42% growth in profitability, which is again a record highest of rupees 15.84 crores. Revenue of the company has grown by 18% to rupees 702 crores for this quarter. EBITDA for the quarter stood at 33.75 crores as compared to 29.85 crores in Q4 FY22. Further, the sales volume for the complete financial year stood at 3.54 lakh tons, and revenue has grown by 27% to rupees 2,385 crores. The debt-equity ratio improved to 0.66 from 1.42x. Net working capital days reduced substantially to 48 days from 68 days. Long-term borrowings of the company reduced by 36% to rupees 94 crores as compared to 146 crores in FY22. The short-term borrowings also reduced by 35% to rupees 141 crores compared to 217 crores in FY22. During this quarter, the company achieved its highest ever capacity utilization rate at 70%, which is again the highest as per the industry standards, and the sales realization has also improved significantly. Now I would like to take you through our ongoing projects and other major developments during this year. During this year, the commercial production of color coating lines for producing premium color coating coils under the brand name Hi-Tech Color Star started in Q4 FY23. This is a forward integration to our existing cold rolled and galvanizing facility. The color coated coils are widely used for roofing, wall cladding, white goods, domestic industrial sheds, bus bodies, metro rails, etc. The quality and the supplies have already started, and the quality is very well appreciated in the market. Secondly, we are continuously getting good orders from the Jal Jeevan Mission for supply of galvanized pipes. Therefore, to augment the needs of galvanized products, the company has set up another hot-dip galvanizing plant at its Secunderabad facility in UP. Third, installation of cold rolling mill for backward integration at Hindupur plant. This is also underway, and we are hopeful to get it commissioned by the end of Q2 FY24. Our greenfield facility of large diameter pipes at Sanand, Gujarat Phase 2 is about to get commissioned. The commercial production is expected to start from Q3 FY24. This is at a capacity of 170,000 tons. This facility will enable us to penetrate in large diameter segments of water, city gas distribution, oil and construction sectors. During this year, the company has entered into a MOU with Amplus RJ Solar Private Limited for purchase of solar electricity of 5 megawatts at Secunderabad facility. This will not only help us in saving power costs, but also an important step towards achieving the ESG goals of the company. The central government's allocation for huge capex towards infrastructure, which includes railways, airports, telecom, green energy, green hydrogen, agriculture, water supply schemes, in next 4-5 years are surely a big demand driver for the steel products of the company. Hi-Tech is continuously building its capacity and is well poised to cater any kind of demand that comes from any geography or any sector. We are further committed and focused to further improve our capacity utilization of all our facilities and also increase the proportion of value-added products in the coming year. Our recently added capacity and new upcoming facilities are setting our stage for robust financial year 2024. So to sum it up, we at Hi-Tech remain very positive on India's structural growth story. Now we can open the floor for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Garvit Goyal from Nvest Research. Please go ahead.
Hello. Good morning, sir. Am I audible?
Yes, Garvit, you are audible.
Okay. So my question is on our EBITDA margins basically. So our OPM percentage is falling over the years, right? And while our peers are getting them increased and also operating at higher level than it. So how do you see these things going forward? Can we see some further fall in the margins in our effort to rise the volume, or how it is going to shape up in FY24?
So Garvit, we work on EBITDA per ton basis, and as you would have seen, on the EBITDA per ton levels, there is a constant improvement. As on Q3 FY23, our EBITDA per ton was in the range of 3,000 rupees per ton, and in Q4 it has risen to 3,200 rupees per ton. And with the addition of this color coating line facility and the larger diameter pipe and other special SKUs, and also the increase of galvanized products in the total basket, so this is further poised to grow from here. Our internal target is to take it up to 4,000 rupees per ton level, and we are working in that direction.
And what is your internal target for FY24 for this particular metric?
So this year our target is between 3,500 to 4,000 rupees per ton. It will also depend on the how the steel prices behave during the full year.
So this change will be gradually, or how it is going to be, like how the current run rate in this particular quarter that is ongoing?
So there will be sequentially improvement in all the quarters.
Okay, understood. And sir, what is your volume target for FY24?
This year we are targeting volume growth of almost 30%.
Understood. And so one question is on the strategic aspect, right? We are focusing on this Jal Jeevan mission and all this stuff that the government is currently undertaking. Are we also focusing on the on supplying to the key contractors who are getting the contracts for the railway side and all this stuff, so that we can further improve our EBITDA per ton? Or what is the strategy for us? Like we will continue to grow in these Jal Jeevan missions and all this stuff from directly government, or we are looking to expand ourselves towards the contractor side as well?
So we are supplying in all the major infrastructure projects of the country, and Jal Jeevan mission being a big one and an important one. So that is where the maximum volume is. But there is no sector that we have left untouched.
So are we getting any kind of contract related to, or are we supplying our products to the building of projects like railway stations and all this thing?
Absolutely. We are working in high-speed rail corridors. We are working in the metro rail projects. We are working in the NCRTC projects. We are working for the upgradation of railways also. dedicated freight corridor. So, railways is one important segment for the company, and we are present in all these areas.
Lastly, what is our capex plan for FY24?
So major capex has been done as on FY23, and there is some CWIP of about 40-45 crores, which will be spent during this year, which will include all the maintenance capex and everything.
Okay, understood. Thank you very much for the opportunity and all the best for the future.
Thank you. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. You may press star and 1 to ask a question. Our next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good morning, sir.
Sir, very good morning.
Congratulations on a good set of numbers. Sir, I want to understand since last year we are talking about a 1 million ton capacity roadmap. So just wanted to understand by which year we would be able to complete, and the capex which would be needed to be a 1 million ton company, and the sources of it.
Vikaji, so by end of this financial year, the company's installed capacity will stand at 7.5 lakh tons. And we are eyeing 1 million tons in next 1.5 years from FY24. So you can say mid of FY26, we will have 1 million tons ready with us.
Understood, sir. And sir, so from 750,000 to 1 million tons, whatever the incremental capex you would be needed, would it be internally funded as looking at the current utilization level, or you think that there would be some debt which you need to take further?
No, we will not be taking any debt. All this will be funded through internal approvals, and most of it is brownfield. So the capex requirement is not as big as the greenfield project, from 7.5 to 1 million tons.
Understood, sir. Sir, my second question pertains to our general EBITDA per ton, which was hovering around 3,200 rupees per level. What is the threshold beyond which there would be some economies of scale which would be started coming to us and could bump up our EBITDA per ton from here?
Sir, I think the major growth in EBITDA per ton will come through the increase of value-added products, which right now is around 27-28%, and when it will touch about 50%, I think that is when the EBITDA per ton will rise significantly. And the company is working in that direction. So adding new galvanizing facilities, coating facilities, large diameter pipe segments, the gas pipe API segment. So all these areas we are working on. The color coated segment. So all these areas we are working on very, very aggressively. And let's hope for the best.
Understood, sir. So just one last question, if I may take in. This value addition roadmap, if you could give us right now, since you said it's 37%, how do you see it in FY24 in terms of overall volume growth plus the value addition percentage, and as well as for FY25?
Sir, our internal target is to take it to 50% by FY25. So this is what we are working towards, and I think we should be achieving that pretty at the targeted time frame.
And FY25 target volumes?
Sir, about 6 lakh tons.
Okay, sir. And sir, we have now API grade pipe solutions as well. So, but that is like a tender-based made to order thing. So, have we made any inroads in terms of approvals, etc.? Where are we right now? Or if you could give us some insight into that also, because that's a pretty high margin business, right?
Yeah. So this project is still under commissioning, and we are hopeful to get this commissioned in Q3 of this financial year. So once this gets commissioned, so all these approval processes will start from there on.
Understood. And sir, just one last thing. What is the peak debt level which is acceptable to the company? Because our working capital would also be keep on increasing, and we are also in a growth phase. So, what would be the peak debt level which you feel is the acceptable to the company, and you would not go beyond that?
Sir, in fact, sir, we are reducing the debt for the company. So, this year you have seen a stark reduction, and going forward also, there will be reduction, not enhancement in the overall debt.
Understood, sir. Thank you. That's all from my side, and all the best for future.
You're welcome, sir.
Thank you. Before we take the next question, a reminder to all participants that you may press star and one to ask a question. Our next question is from the line of Vignesh Iyer from Sequent Investment. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. And thank you for the opportunity. I just wanted to understand if we are planning to take any price hike in this year as such.
Yeah, good morning, Vignesh. So can you please elaborate, price hike, what?
As in, when I say, your sales per ton, would it increase, or we are means more or less would maintain at this level? If I'm not wrong, it is around 67,000. So would it move more towards 70,000 going ahead, or we will only see volume growth? Just to understand what would be your total growth for the year.
So Vignesh, our focus is towards volume build-up, and the prices of our products also, they also are a factor of how the steel prices move. So, I think, around 60 to 65,000 should be the right range for this financial year.
60 to 65,000. Okay.
Yeah.
Okay. Fair enough. And just to understand, as we move towards more value-added, product to our total sales, and our facility coming, our Gujarat facility, Sanand facility is coming on stream by Q3. So, if I have to look at a quarterly number, would it be more skewed towards quarter 3 and quarter 4, your sales, or it will be more or less, equal across the year?
Vignesh, H2 is historically always the highest for the entire sector, and with our new facilities also, so I think our H2 will poise out much better.
Okay, but if we have to just compare on a YOY basis, our quarter 1 and quarter 2 would still be better, right?
Yeah, for sure.
Okay. Okay, just another question from my side would be, what would be the tax rate for FY24 going ahead?
Sorry, can you repeat the question?
What would be your tax rate? For the past 3 years, it have been 26, 27, 24. So just to understand, what would be the tax rate for next year, FY24?
Yeah, it will be the same.
Okay, fine. And that's all from us. Yeah, thank you.
Thank you. Our next question is from the line of Garvit Goyal with Invest Research. Please go ahead.
Thanks for the opportunity again. To the earlier participant, you mentioned you are targeting the internal sales volume of 6 lakhs. Have I heard right, or is it and something?
For FY25, Garvit.
For 25. Okay, right. Yeah. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask a question. Our next question is from the line of Ronald Sioni from Sharekhan Limited. Please go ahead.
Yeah, good morning, sir. Congratulations on good numbers. Sir, I presume that the 96 crore warrants which you had, initial warrants you had raised, so that would have been utilized to reduce the debt, right? And the balance money would still be pending of about 75% of 383 crores, right?
Right, sir.
So that would be utilized towards that MOU which you have signed with UP government, the investments which you will be doing till 2030?
Yes, Sonal, there are a few things that is, going on, that is on the table. So we are yet to take the final call. So, I think by the end of H1, we'll be able to finalize, where we'll be, allocating our capital.
Okay. So still, vis-a-vis, debt reduction or expansion, the plans are yet to be finalized.
Yeah. So 1 million ton, till 1 million ton, I think we are, these warrant proceeds, and then I think these two will be the major deployment areas.
Okay. And another thing is that this Sanand was earlier 1.2 lakh ton, right? And you have now scaled up to 1.5 lakh?
Yes, sir.
Okay, so that's
here we are exploring the export vertical from here. So we are targeting exports from here. So for that we have enhanced the capacity.
So sir, are these export opportunities strong enough because you are also still domestic?
Yes.
And
For sure, definitely.
So it would yield vis-a-vis better profitability, or it should remain profitability range in terms of EBITDA per ton would remain the same for exports and domestic?
No, exports is definitely it's a bit higher than the domestic market.
Okay, it's a bit higher.
Yeah.
Okay. And last one is your commentary post quarter 4. How I presume there will be some bit of correction in steel prices. So how the secondary and primary spreads have moved post quarter 4, and how you are seeing that a more stable. I believe the prices are expected in FY24. So just your view on the steel prices and the spread between primary and secondary.
The international steel prices are going down in Q1. So April, May, June, we are seeing reduction in steel prices globally. And, this will help us in bridging the gap between secondary and primary significantly.
Mm-hmm.
So in Q2, I think, this gap which was at 7,000-8,000 rupees per ton, it will narrow down significantly.
Okay, sir. In Q2 of FY23?
Yes, sir. Q2.
Okay. And was there any inventory gain or loss, the inventory gain in this quarter?
So not much, because we are having the orders from Jal Jeevan Mission. So these are all fixed price contracts. So we are having a strong order book for the prices. So we are not basically working. So even in the downturn, in Q1, as the steel prices falling, so the orders in hand, they are helping us to mitigate the steel price risk.
Okay, sir. And so last question is that there was some issue with respect to blacklisting of some of the players in Jal Jeevan Mission. So is that related to only plastic piping, or steel pipes also comes and they have also seen some kind of blacklisting, especially in, say, unorganized segment?
So in steel price, the qualification and the technical requirement in the first stage itself was quite stringent. So only a handful of companies could participate, and they were eligible to supply in these projects. So there's
such issue of blacklisting.
No.
Okay. Thank you very much, sir, and best of luck.
Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Ruchika Dhanuka from Phillip Capital. Please go ahead.
Okay.
Ms. Ruchika, your line has been unmuted. Please go ahead with your question. Ms. Ruchika Dhanuka, may we request that you unmute your line from your side?
Good morning, sir. Congratulations on good set of numbers. Just wanted to know about how has been the industry growth so far, and do you feel the industry has already consolidated, or do we see consolidation coming up in the near future?
Good morning, Ruchika. So to answer your question, as per the data that we are possessing, So our tube and pipe industry has risen by almost 10% this financial year. And in terms of consolidation, yes, the number of players and the volumes have come down significantly over last 5 to 6 years. So in tubes and pipes category, there are like about 10 players in the country who are, and there will be like 4 players who are working on the pan-India basis.
Sure, sir. That's it from my end. Thank you.
Thank you.
Thank you. Our next question is from the line of Garvit Goyal from Invest Research.
Hello. So our borrowings have reduced in FY23, but the impact is not there on the interest side. So how it is going to be in FY24?
So the maximum repayment was in Q4.
So in FY24, we are going to see a sharp fall, right?
Yeah. So the FY24 also there will be sizable reduction.
Understood, sir. Understood. Okay, right. Thank you.
Thank you. Our next question is from the line of Sriram R, who is an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I have 2 questions. Can you give the sector-wise revenue breakup for FY23?
Good morning, sir.
Yeah.
So sir, this we have uploaded on our presentation. I think you can have a look there. And if you have some query, I'll come back to you. So there we have given detailed analysis.
Not for the industry. I mean, for the company.
Okay. So basically, the infrastructure and construction side is 50%. The building material side.
Okay.
And 15% is the water transportation business, which is the Jal Jeevan right now.
Okay.
10% is engineering, in which we are supplying to the solar, renewable energy, and all the energy sectors and power transmission sectors.
Okay.
And rest will contribute of the agriculture, greenhouses, polyhouses, and furniture and general engineering purposes.
Okay, so infra 50, water is 15, 10% engineering, and the balance is right?
Yeah.